kind of cautious approach to the year is probably the right strategy for them. And they're going to couple that with, cost control and some of the things that will help them keep the Target story going.
Jen, I do think about inventory. It's something we talked about a lot with the retailers, I feel like, over the last year, that especially with, troubled and strained supply chains, that people were stocking up big time to make sure that they had what customers wanted. And so then there was the work down of it. Is there something specific, though, to the Target story that is, more problematic or different from what we've seen more broadly in retail?
Well, I would say last year they had huge problems with inventory. They had way too much inventory and all of the wrong things. They managed to clear that out pretty effectively. And I think what investors were worried about was that inventory level coming out of the holiday season. But the good news was that inventory for the discretionary categories was actually down 13%. So that really says to me that they did a very good job of kind of right-sizing their inventory in those categories where there's the greatest risk, especially for bigger markdowns and things that could hurt your margin. So it seems that their strategy to manage inventory actually really did do pretty well over the holiday season, and that was very good news coming out of their release today.
I think about the lack of staples at Target, because we were talking about Walmart and how they've been able to, keep a steady pace of customers coming through the door because they sell a lot of food. And so people come in for that, and that helps them out. With Target, that's not necessarily the case. If we continue towards this recessionary environment, does that become a problem for Target?
Well, Target is, I would say yes, it is something that Target will have to grapple with, because most people don't do a full food shop at Target.
Yeah.
They do have other high frequency categories like beauty that does pretty well. But if we go into a bigger recession or spending pulls back even further, it is harder for Target to navigate those waters than for a peer like Walmart. But I will say that some of the strategies they have, which is to sort of double down on personalized offers and being more careful about how they do promotions, at least could help them preserve a little bit of margin if they have to go down that path.
Can you tell me a little bit more about the beauty piece? You mentioned they did really well in that. I'm curious how much of a factor that was in Target's success and what's making them such a stellar performer in that category.
Because they now have that collab, right, with Ulta Beauty, right?
Yeah.
Exactly, they do. And that collaboration has actually been very successful. It's in a little over 300 stores. And from what Target says and also from what Ulta says, it's been very incremental to them. So it's helped them with traffic, it's helped them with sales, but it's also kind of elevated Target as a beauty destination. But even with that, even the stores that have an Ulta in them, the beauty department is actually doing well. And I think part of that is that Target has done a good job of diversifying what they offer. So when you think about inclusivity and you think about different product needs that different types of consumers have, Target has done a very good job of tailoring their assortment and offering something interesting and new and fresh, and that's what's drawing people to that beauty department. And it is a pretty high frequency category, so they keep coming back and they explore what's new and they buy their the products that they use all the time as well.
Hey Jen, I'm assuming it's high margin too, right?
Exactly. It is a higher margin category than, say, food or paper products. And so that definitely helps Target as well.
So why do most people go to Target? I mean, I certainly went when my daughter was younger, right? Like we would go for kids' clothes and things, and we'd go for like paper towels and stuff like that. And we used to joke that like you couldn't get out of Target for at least, it was at least $100 and normally like $200 or $300. But what do people go for Target? Because there was a period when their designer collaborations were a big reason why people came in. That was years ago. Why do people shop there?
Well, I think people shop there still for that sense of discovery, and it's discovery at a very affordable price point. So Target has moved away. They still do designer collaborations, of course, but their own brands have taken on such personality that when they turn over their seasons and they have new items, people are drawn there for just the browsing and for the search for something new that they can afford. And so whether it's one shirt that they can add to their wardrobe or whether it's a beauty product, that sense of discovery is one of the reasons that we see such strong traffic into stores. And that's really what saved Target over the holiday season. They had very positive and strong traffic into their stores, and that really helped buoy their overall results.
I have to say, I'm always surprised, like bathing suits and things.
Yeah.
Like, it's pretty amazing, kind of the stuff that they have in there, and you think, okay, I'm never going to find anything, and you're like, oh my God, I do.
I feel
and
like
it's very affordable.
I walk in there. We all do this. You walk in for a face cream, and you leave having spent
right?
$300. I mean, you just said it, Carol.
That's exactly.
Jen, I wonder if you can explain a little bit. You mentioned that, and I love the way you said that you're able to kind of overspend and get that dopamine hit of discovering something new because the products are at a kind of favorable price point.
I feel like you found Maddie's love language a little bit.
Yeah,
So go ahead.
yeah. I'm like, retail is my new dream beat. Can you explain anything that Target does within its stores that you know of to kind of increase that behavior of discoverability?
Well, if you've been in a Target store lately and you look at how they have things set up, they have categories next to each other that are very complementary. And so you have for example, you have fashion, and then right in the middle of that you have accessories, right? So you have models that have not just a dress, but they have a purse, and they have sunglasses, and they have, things, and those items are right there. So it's easy to kind of cross over into that. And then you look across the aisle, and now you've got beauty, and you can buy a lipstick to complement the outfit as well. So they're very clever at how they're putting their merchandising up for display in the store and putting the categories next to each other that sort of naturally feed into the shopper going from one to the next to the next.
All right.
So some people go to the store and hit one department and leave.
Yeah.
But Target's very good at encouraging you to do the whole circle.
All right. So I got to ask you, what does what we got from Target tell us about the consumer more broadly? We've had some strong retail spending data, but what does it tell us? And what kind of consumer are we talking about?
Well, I think that we're still seeing that lower income consumer is still a little bit constrained. They're very focused on just the necessities. Your kind of middle income consumer, which is kind of more closer to Target's core consumer, still has a little bit of play for discretionary spending, but they're being very selective. And so that's where the merchandising has to be really on point, because people are still doing a little bit, but it has to be what they want. And the higher end consumer, what we're seeing is that they're starting to be a little bit more conscious of their spending, trading down on areas where they can save a little bit of money, but without affecting quality. So you see the trade down for things like in grocery and things like that. So it's really a story of where on the income scale the consumer is,
right?
And how that then plays for each retailer's strengths and weaknesses.
All right, Maddie, you have to say it.
Well, we were talking about a new term, rich session. The idea that the recession is going to be impacting higher income and even middle income people doing exactly what you just gave us the evidence of, Jen, that they're going to be the ones cutting back on spending in those, categories that are a little bit more discretionary, like a Target.
Yeah, exactly. And I mean, if you think about it, people who have retirement savings and are seeing the savings, sort of erode a little bit with market performance, are thinking more about the future and thinking more about how do I make that up. And they can do that more easily by influencing their current spending levels and pulling back in certain areas. And so I think that may be part of that as well, where you're seeing that higher income consumer a little bit more concerned because they see the longer term impact on their overall finances.
Always appreciate your analysis. Jen Bartoshis, she's Senior Retail Staples and Packaged Food Analyst at Bloomberg Intelligence, joining us on the phone from New Jersey. Right now, shares of Target, they are up about 2% in today's trading session. You can read more at Bloomberg.com. Stock is up just shy of 15% so far in 2023. Carol Master, Maddie Mills, we are Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. I'm Charlie Pellet. We check markets all day long here at Bloomberg. The S&P just turning lower, along with the Dow, NASDAQ holding on to gains. But let's find out what's going on in markets as we head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Stocks are mixed in what's been a quiet end of the month amid modest trading volume. The Dow is down 180 points. S&P is little changed, while the NASDAQ is higher by 30 points. The U.S. 10-year yield is at 3.91%, and small caps are up 5. 6 of the 11 main S&P sectors are trading higher, led by gains in communication services and materials, while utilities and energy are providing the biggest drag. Nasdaq Biotechs rise 15 points, transports drop 45, 70s are up 30 points, while the VIX is lower by 3%. Leaders in the Dow, JP Morgan, Walgreens Boots, and American Express, while Goldman Sachs, Merck, and United Health are the worst performers. On the earnings front, Target rose after results beat with better inventory offsetting weak guidance. Olaplex sank 10% after a disappointing outlook, and Norwegian Cruise fell 12% after a worse-than-expected quarterly loss. In other news, Dish Network fell to the lowest since 2009 after a data breach and an analyst downgrade. And wrapping things up, look for earnings from Rivian, AMC, and First Solar after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
All right, Bailey Lipschultz, indeed. We thank you very much. And to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Maddie Mills live in our Bloomberg Interactive Brokers studio. So Tesla shares, man, they are on a tear this year. They're up roughly 70%, nearly doubling from January 3rd of this year. Not enough time truly to go through all of the Tesla headlines nor those on Elon, but we did want to mention one today, Maddie.
Yeah, this is all about Tesla building that new plant in Monterrey, Mexico. In our weekly Bloomberg Plugged In, we're going to get into the details and the huge amount of significance to this move. So we've got Bloomberg News EV reporter Sean O'Kane, who has been following this with us on the phone from Austin, Texas. Sean, thank you so much for being here with us. Okay, this deal, it wasn't a definite. What exactly got us here? What got us to Mexico approving the new Tesla plant?
Thanks for having me. A lot, I guess, is the short answer, as it always is with Tesla. It seemed like there was a definite ramp up in interest from Mexico and in conversations between different Mexican states and Tesla over especially the last 2 months. But as far back as last year, early last year, mid last year, it seemed like there was maybe the possibility that Tesla was going to look north of America for another North American location, and there was some hiring going on in Quebec, and it seemed like maybe they were going to look to Canada to find some new land. But I think what we saw in Mexico was a real eagerness from all these different states to find a way to make it work for Tesla. And what we've seen over the years as Tesla has grown, similar to other automakers, they have sort of a supply base down in Mexico. It makes, in some ways, more sense for them to locate a factory there than it would in Canada. And so, especially over the last couple of weeks, we saw this kind of intense competition being created between these states where all these different state governors were sort of competing with each other, doing some sort of kind of stunty, newsy stuff to attract attention to their states. And now they're looking to be in Monterrey.
I mean, Tesla gets a lot, right, by being in Mexico. And I'm thinking about the labor force, the supply chain access. What is the plus side for Tesla in doing this?
Yeah, I think that's something that should definitely not be forgotten in all of this. I think the relatively cheap labor compared to the United States, especially, and also Canada. Also, it's a different sort of workforce scene there. There has been some unionization at some automaker plants, but not with the sort of consistency that we see at some of the U.S. auto plants. And we know that Tesla doesn't typically like to work with unionized workforces. They think that they're better off treating their employees with their own sort of attention in mind and benefits and everything. And so I think that's a huge thing. But, I also think it's still hard to say for sure exactly what they're going to get out of this. I know that we will probably see some sort of incentive package to some extent. I would assume the local and national governments there might be able to do some aid to Tesla. That's always something that they're keen to get out of these deals. It's one of the reasons they like to pit different states against each other or different locations against each other when they're trying to choose a new spot for a factory. So I think there's probably more to come. Honestly, all we really have is what we heard from some of the local officials and also AMLO today. But I think we're probably going to hear more of it tomorrow at Tesla's Investor Day here in Austin.
Hey, I wonder if you can talk to us a little bit about the water situation in Mexico and whether or not that played a role in this decision. I mean, I know from your reporting that it did, but can you give us a little bit of the background on that and the impact that the decision to move forward with this could have on some of the natural resources there?
Yeah, of course. AMLO said, pretty explicitly in some of his press briefings that that was a huge concern. It was one of the reasons that he was wary of Tesla possibly locating in Nuevo León, because there's certainly in the northern parts of Mexico and in some of those states, there's just a much scarcer water supply, and it's just much more fragile. And this is a big concern for any large factory. Large factories always need a lot of water to operate, and it's also something that Tesla has shown in the past that it is. I don't know the right word for it, I guess, but they had issues with the water supply in Berlin, where they were building, or outside of Berlin, where they built the factory in Germany, and that was a big sticking point there.
Sean, can you remind us what the issue was with that for our listeners who may not have followed that, and viewers?
Oh yeah, sure, of course. I mean, it was a similar one to this in the sense that where Tesla built outside of Berlin is a pretty fragile water table, and it was really just the local officials there and the environmental officials wanted to make sure that Tesla wasn't going to be using more water than the area had available, and that it wasn't going to be putting the local area in a position where all of a sudden residents and even local businesses were going to not have accessible water. And it's a similar situation here in the north of Mexico, where it sounds like, from what we heard from the Mexican government, that they're trying to make sure that Tesla agrees up front to be recycling all the water that goes into the plant back into the local ecosystem, and so that people in that area don't wind up fighting for water in more ways than they already are.
No, and as you say in Mexico, I mean, if you've got farming going on, I mean, this is really kind of crucial. Hey, you mentioned we've all been waiting for tomorrow's Investor Day by Tesla. You obviously will be all over it, Sean. But I do think about some of the big picture stories and issues when it comes to Tesla. So much going on, so many questions I'm sure to be asked of Elon, whether it's on Tesla and his involvement in Twitter and so on. But I do wonder, as Tesla continues to expand its production, what are the smart big picture stories and concerns that we should all be focusing on?
Well, I mean, the thing we're going to probably hear the most about tomorrow is battery production, battery capacity, just in general, energy generation. Musk has talked a lot over the last couple of years about wanting to get Tesla to the point and really get the industry to the point where there's just multiple terawatt hours being created to be able to fuel this energy revolution, whether we're talking about electric vehicles or battery storage for clean energy systems. So I think that's going to be a big focus. But I think the most sort of exciting thing on the product side is, what is he going to talk about? How is he going to talk about what Tesla plans to use all of that energy? He's spoken recently, over the last year or so, about how Tesla is not really constrained in being able to make cars or sell cars. He thinks the big limiting factor is how many batteries are being made around the entire world. Tomorrow he's going to lay out a plan, most likely, about how Tesla's going to increase that output. But is that all going to go to autos? Is he going to talk about whether or not Tesla's going to ramp up its energy storage efforts? And the real sort of probably most exciting thing we'll hear is he's going to be talking about this sort of next generation platform, this next generation vehicle platform, I should say, which he said will cost about half of what the Model 3 and Model Y platform costs, which could mean a much cheaper car than Tesla already sells, and one that would be created at much higher volumes than Tesla's already building its current cars at, which is one of the reasons I think why we saw an agreement for a factory, sort of come to play today. Because if they really are going to announce a much cheaper car that can address an even bigger market, and they're going to have the batteries to back that up, they're going to need somewhere to build it because they are at capacity in California, are pretty much pledged to capacity for the Model Y and potentially Cybertruck here in Austin, and then they don't really have anywhere else to build vehicles here in the United States. So I think Mexico would probably be the next most logical place for a cheaper sort of Model 2, call it, vehicle to be built.
Sean, we just want to know, are you in a Tesla right now, or where are you?
No, I'm not. No, I'm not. But my colleague and I were doing some reporting and trying to cover as much ground as we can while people are in town for this event this week. There's people flying in even last minute and from all over the world to come try to either beat down the doors and get themselves into Investor Day, or they were one of the lucky few to get the invite. So we're trying to cover as much ground here as we can.
Ross Gerber on that list? Just quickly, about 5-10 seconds.
That's a good question. I believe he is. I know he's in town, and I know he's going to be around with some of the analysts tomorrow.
Yeah.
So that's a good question. But maybe he got disinvited after he decided to not run for the board.
He backed off, though. He backed off. So.
Did they say like, oh, we'll meet with you?
Yeah.
Right.
Well,
see.
Sean, we know you're busy. We so appreciate your time because we really wanted to get to this story. Sean O'Kane, EV reporter at Bloomberg News, joining us on the phone from Austin, Texas. We'll be following certainly his coverage tomorrow of that Tesla investor meeting. All right, let's get a check on world and national news. Off to Nancy Lyons. She's in our Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. President Biden is in Virginia Beach, Virginia this afternoon to promote his health care policies. He's warning some Republicans want to cut spending on health care.
In Congress, they want to eliminate a lot of health care coverage, those mega Republicans, increase costs for millions of Americans, and make deep cuts in programs that families and seniors depend on. And that's what's at stake now.
Biden says he's committed to easing the burden of medical costs for Americans. Republicans are pushing for budget cuts in exchange for raising the nation's debt ceiling, but they have not provided any specifics on where they'd like those cuts to be made. The Supreme Court heard oral arguments today on President Biden's student loan forgiveness program. 6 Republican-led states are suing to block it, calling it government overreach. And conservatives on the bench are questioning the legality of the plan. The Biden administration, though, says it's legal based on the HEROES Act that allows the president to provide relief in national emergencies like the pandemic. On the Senate floor, Majority Leader Chuck Schumer spoke in support of the plan.
Today's case before the Supreme Court, pushed by Republican office holders who oppose the president's plan, is a slap in the face of working Americans across the country.
Senator Schumer says 90% of the relief would be going to those earning less than $75,000 a year. The new House Committee on Strategic Competition between the U.S. and China will hold its first public hearing tonight. Committee Chair Congressman Mike Gallagher of Wisconsin says they want to understand what we got wrong about the Chinese Communist Party and what we need to understand about it moving forward. Witnesses tonight include former President Trump's national security advisors. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. I'm Charlie Pellet. 19 minutes to go ahead of the closing bell. We do check markets all day long at Bloomberg. The Dow and now the S&P both trading lower. We've got NASDAQ holding on to a gain as investors round out a brutal month for both stocks and bonds with low conviction moves. Right now, the S&P is down 9, drop there of 0.2%, has been fluctuating for much of the day. The Dow lower by 237, a drop there of 0.7%. NASDAQ is higher by 7, up barely now, up by less than 0.1%. We do have the 10-year yielding 3.90% with the 2-year at 4.79%. Spot gold at $18.27 the ounce, up $10 the ounce, up 0.6%. Bitcoin is down 0.4%, 23,290 on Bitcoin. West Texas Intermediate crude up 1.6%, 76.90 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. There's still time to claim the employee retention credit. Unlike PPP, the ERC is not a loan. Business owners can use the ERC to expand their company, pay off debts, or hire new talent. The money is there to help your business as you see fit. To learn more, just head to getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got just about 8 minutes left in today's trading session, getting ready to wrap up this Tuesday when it comes to the trade, and also really wrap up the month of February. And as we do, of course, Charlie breaking down some of the standouts in the trade today, but we've got equities really a leg down, if you will, in the last hour or so. But as we heard from Creedy earlier, it's really about, once again, what's going on in the Treasury trade, watching that 10-year with a yield of 3.90, staying below that 4% mark, 2-year note with a yield of 4.788. So got to talk a little bit about what's going on.
We got to talk about what's going on in the markets, in the macro, and to do all of that, we are going to chat with Nadia Lovell, Senior U.S. Equity Strategist at UBS Global Wealth Management. And Nadia joins us on Zoom in New York City. Nadia, great to speak with you. A little bit earlier, we were talking about this idea of the rich session, that the economy is going to be felt the most by the middle income, higher income folks. It feels like every day we get one of these new buzz terms to describe our economy. What are you looking at right now, and what is the term that maybe feels the most prescient to you?
You know, I think that this economy right now is sort of in suspension. You know, that's also being somewhat propped up by consumer spending, and that's coming in with inflation. You know, the Fed still has quite a bit more work to do in order to get that inflation genie back in the bottle, and that has implication, as we all know, for the economy. We think that ultimately the Fed might have to force this economy to experience a period of subtrend growth in order to get inflation back into the bottle, because ultimately inflation will be destructive to the consumer if it does not come back in line with the Fed's target.
So, Nadia, in some ways, you're almost kind of popping the inflation bubble. Like, just do it. Like, get it done. Could be harsh, could be not comfortable, and bring about that recession to some extent.
To some extent, but you know what? I think the Fed is still trying to discover, like, where that neutral rate is and where that level of sufficiently restrictive monetary policy is. You know, we're in uncharted event coming out of this pandemic. So as we approach that probable level of sufficiently restrictive policy, we do think that the Fed is going to do so in 25 basis point steps. So we are looking for an additional 25 basis points increase in the March meeting as well as the May meeting. But they might have to go again in June if, you know, the labor market does not cool and if inflation still remains elevated. I know that there's this debate now in the marketplace that if we could see that resumption of the 50 basis points cadence, but we don't think so. We think that we're going to see more a string of 25 basis points and a more normal return to sort of remember the days when, rate hikes moved in 25 basis points increment. So we think that will be the path of the Fed will take going forward.
And we've been talking a lot about the hot inflation data out of Europe, the ECB potentially going up to 4% on the peak rate. That's what markets at least are pricing in now for the first time. To what extent does that impact your thinking and how you are positioning moving forward?
As we know, like inflation has been a global problem. We do think that, there are probably more opportunities outside of the U.S. So we're looking at areas within Europe as well, particularly Germany, and we tie some of that to the reopening of China. We're also looking at opportunities within China. As China reopened, we think that the consumer has amassed a vast amount of excess savings during the pandemic, and they're waiting to spend that. That also ties very neatly into our outlook for Brent oil as well. I mean, that's one of the reasons why we do favor the energy sector, because we think that Brent oil will get above $100 this year and towards $105 by the time we get to the end of the year, and that should be positive for the energy sector. So that's sort of how the global economy is informing our thinking.
Nadia, why wouldn't we all just be in cash? We've got a great story on the Bloomberg about how for the first time in more than 2 decades, basically cash is beating the 60-40 portfolio. And so that could be, cash or cash-like. So it could be 6-month U.S. Treasury bills. I mean, why, as an investor, when we, day in and day out, I think, Maddie, with our TV colleagues, with our guests, we're saying, is it a recession? Is it a soft landing without a landing? Is it a, what is it? Is it a rolling recession? There are questions to be had, and we know Fed policy is not an exact science. So why not just play it safe when what the Fed is doing, this aggressive tightening, has really upended the investing world, if you will, and cash makes sense. You can get a decent yield.
Yeah, Carol, don't disagree with you in terms of like having some exposure to cash. I wouldn't be in all cash, because at the end of the day, we do need to have a diversified portfolio, and over a long term, we do think that the equity market will have better returns than cash. But near term, it is also prudent to have some dry powder and have some exposure to cash and get that pickup in yield while you wait for a better opportunity in the equity market, which
but how long do you
come
think,
later this year.
So later this year, you think that's when equities kind of bottom out? Do you think we've bottomed out with the S&P at this point? We keep bumping up against the lows and holding in terms of that upward trend that we've seen certainly this year. Do you think we take out that level on the S&P? I think it was back in October, right, that we hit a low.
Yes. It's quite possible that the S&P could dip back under 3,600, particularly if the macro data starts to deteriorate. Remember, what we're waiting for to sort of officially call a recession is a crack in the labor market, but the labor market does remain strong. So it feels like the recession is delayed, but not off of the table. So even if we don't retest the below 3,600 low, we do think that the market will pull back and correct from here. We are looking by year end that the S&P get down to 3,800 for our year price target. And that's because valuation, the valuation support isn't there. Valuation is quite elevated in the context of a higher interest rate environment. And the earnings outlook continues to deteriorate. We're looking for a contraction of about 5% in earnings growth this year. And we don't think that that's fully appreciated by the market yet.
We have time for one sentence on this, Nadia. If you could sum up your biggest fear right now when it comes to the macro headwinds, what would that be? What's keeping you up at night?
Inflation, that inflation continues to price at the upside, and the Fed has to go to 6%.
Yeah.
That leads to a deeper recession.
Yeah, the Fed has certainly put that front and center. Nadia, thank you so much. Really appreciate it. Nadia Level, she is Senior U.S. Equity Strategist at UBS Global Wealth Management, joining us via Zoom in New York City. I liked what she said about economy and suspension, that the economy is still propped up by so much, and we get to see that. It plays out in the retail sales numbers.
Yeah, and then we got to go to 6%, which is so interesting given what Jess said earlier about her sources saying, we'll be fine as long as we don't actually go to 6%.
Right. There's a point where, there's a level that starts to really kind of unwind and take out investors, certainly on the equity side of things. All right, folks, just about 10, 11 minutes left in the trade. We're going to head over to our TV colleagues in just a moment. Carol Massar, Maddie Mills, you're listening and watching Bloomberg Business Week on Bloomberg Radio.
company news headlines on Bloomberg Radio.
It's 3:53 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. Sources say payment processors Visa and MasterCard plan to defer launch of some crypto products and services until market conditions and the regulatory environment improve. This, according to Reuters. Shares of MasterCard down now, little change, down less than 1/10%. Visa also little changed, up less than 1/10%. Zoom video communication shares are advancing 1.4%. after the company forecasts quarterly profits that far exceeded analysts' expectations. Tesla will be building a new plant in Monterrey, Mexico, ending weeks of speculation over where the maker of electric cars will choose to operate in the country. Tesla will have more to say about the project at tomorrow's Investor Day with CEO Elon Musk. David Welch is Bloomberg's Detroit bureau chief.
Clearly, the shares are on the rise in anticipation, at least in part, to what he's going to say tomorrow with the Master Plan 3. We could see the Tesla Model 2, which is the 25,000 or thereabouts inexpensive Tesla. That could give the company a lot of growth in an area where right now they're just not playing. Really, nobody is, except for maybe General Motors and to a smaller degree Nissan. So we could get detail on that. Maybe he confirms that the Cybertruck will actually go into production at the end of the year and talk about how much growth we'll get there.
And now we do have Tesla shares trading lower. Tesla ahead of the Investor Day tomorrow, down now by 0.6% to 206.29. And those are the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master, along with Maddie Mills, in for Tim, who is on leave, as you know. Getting ready to head over to our TV team, talk a little bit about the markets, and wrap up the month of February in terms of trading. In the meantime, do want to mention a headline that crossed. This has, coming from the Wall Street Journal, Instacart coming out and talking about, and it's basically its financial picture, and saying it generated sharply higher sales and profit in the fourth quarter, according to people familiar with the matter, and an internal memo as the company gets ready for its highly anticipated IPO. We're talking about its initial public offering. Again, this is coming from the Wall Street Journal in a market where IPOs have slowed down substantially because of some of the volatility that we've seen in the markets. Yeah. So interesting to see this.
Really interesting, especially because Instacart feels like, at least I maybe incorrectly was lumping it into some of these pandemics companies a little bit, like the Zooms that are doing really well, as people wanted to get their groceries delivered. I'm amazed that they've been able to retain so much revenue. Instacart in 2022 processed $29 billion in overall sales across the platform. And also that it seems like, I don't have the numbers in front of me, but I know that they have a lot of customers across the country too. It's not just me being lazy in my New York City apartment. I mean, my mom uses it in Florida. People use it across the country. So my
husband uses it a lot for absolutely.
Why not?
They did say full year revenue increased by 39% to about $2.5 billion for 2022. Again, according to a person familiar with the matter. Instacart sharing those numbers today during a call with investors. During the call, executives said the company is waiting for more cooperative markets to go public. Again, coming from the Wall Street Journal, who has access to this information. So a little bit of news to keep an eye on this Tuesday. So definitely plays into the public markets, gives you a little idea too of what this company is up to and what kind of growth it's seeing. All right, speaking of growth, speaking of recessions, we're going to... Well, this is the debate, right, that's going on. Can the Fed continue to engineer a soft landing as it continues to fight inflation, which we know is getting stickier and harder to get down, like in this next leg, if you will. It's come down from its highs, no doubt about it, that we saw a year ago, but it's tricky. Markets bouncing around as they just try to figure it all out, investors that is, as yields continue to push higher. All right, we're going to head over to our TV colleagues, talk about the trade, wrap up this Tuesday trade here in February. Beyond the Bell, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Masser and Madison Mills. We welcome our audiences across Bloomberg Television, radio, and originals. And for those folks streaming on YouTube, that monster rally, Carol, that we had in January pretty much gave way, I think, to, I guess you call it a sell-off, or at least a little bit of a range-bound market here. A lot of people really trying to figure out where we go next.
Yeah, absolutely, right? Given back a lot that we gained in January, not all of it, and that's something to keep in mind. We just talked with Nadia Lovell over at UBS Global Wealth Management. She talked about this economy in suspension. I love that phrase, basically saying the economy is still propped up. She says the S&P could dip below 3,600 if the macro data comes, undone, and we do indeed get a recession. And that's the big question right now, Maddie.
That's the big question. I was also so fascinated that she said that we've got to get to that 6% number. And we talked about this, Carol, in comparison with what Jess Menton told us earlier about what her sources, her investors she speaks with, are saying that they're okay with 5, 5.5, but if we get up to 6, they're not going to be happy, Katie.
Doesn't 5% seem so quaint? Remember when everyone was saying that there's no way the Fed is going to get to 5%, and now suddenly 6% is almost consensus?
Yeah, and I mean, not only is that remarkable, but considering we came into this month with most people pricing in rate cuts at some point in 2023, of course, that is now completely off the table, at least based on what we're seeing in swaps pricing. And I think you brought this up a little bit earlier here, that call, Katie, by Citigroup, where they're talking about all the outflows, the net outflows that we've seen from exchange-traded funds, something like $5.1 billion, and of course, a big bet now on shorting this market, about $3 billion worth of new shorts coming in on S&P futures as we get the closing bell here on this Tuesday afternoon. It's pretty much red across the screen here. We had been in the green for a good portion of the day, but we faded as we got closer to the close. The Dow Jones Industrial Average going to close out the day down by about 0.7% or 234 points. That adds up to a loss on a monthly basis of roughly about 4%. The S&P 500 down about 0.3% here on the day, about 2.6% here on the month. The NASDAQ Composite only down 0.1% on the day, and it's a relative outperformer on a monthly basis, down about 0.5%. The Russell 2000, one of the few indices that actually finished the day in the green, up, well, we'll call it less than 0.1% here on the day, though it's still down on the month, Carol Masser, by about 1.8%.
Well, you know what's interesting too, Romaine, with all this bouncing around that we saw on the equity side of things, the VIX, which did go above 21 earlier in the session, backing off of that and actually a little bit lower on the day. So I find that kind of interesting to see kind of the swings that we see certainly in the equity markets, and yet the VIX, Katie, going down lower.
Well, there was some green to be found if you take a look at the industry group. Straight up top, you have materials, some of those metal producers finding reason to rally today. You also have the banks higher, perhaps getting a help from those higher rates, and media and entertainment as well. So that's the green. You look down the screen, there is a lot of red, even though it was a pretty muted fall. You look at what's at the bottom, it's utilities, and similar to the sectors, on the industry group level, it's energy as well, Carol, even though you did see crude oil pop a little bit higher today.
All right, good to know. Let's get some of the specific gainers in today's session. AMAT, we talked about this earlier. Romaine, you touched on it. Applied Materials, off its highs of the session, but still up about 3.6%. It was a top gainer in both the S&P 500 and NASDAQ 100. The story is AMAT basically going after ASML and saying it's begun selling a chip-making machine designed to challenge, really, the semi-industry's reliance on ASML. So it's really fun and interesting to see some of the negotiating and maneuvers that are going on, certainly in the semiconductor space. Meta, you talked about this as well. Interesting. It was top of the NASDAQ 100, right? Up more than 3%. It has nearly doubled from that November 3rd low. Do you find that remarkable?
I do, yeah. Okay.
Like why? I don't know. Anyway, it's because the chat bot race is on, excuse me. First you had Microsoft, then you had Google. You had Mark Zuckerberg, an Instagram update from him yesterday, late yesterday. He said that Meta is forming an AI product team to keep up with the chat bot competition. Everybody is all in on AI and chat bots. Rivian, they're going to report earnings shortly after the close today. They were top in the in the NASDAQ 100 today, and they will be reporting their first full year as a public company, up about 4.6%. But there's a lot of questions questions about this company and growth and production. So we'll be watching out for that, Maddie.
Also, a lot of questions about Norwegian. I won't go through the list of puns that we came up with earlier, rocky seas, etc. But Norwegian hitting the bottom of the S&P at one point today, on the close, down a little over 10%. That's, of course, as the company's under pressure after posting bigger losses than expected. Said that they hope to undergo a margin enhancement initiative, aren't we all? Fourth quarter adjusted loss per share came in at $1.04. They haven't posted a profit since early pandemic. Interesting that even in this bad news for Norwegian, the Fed can't find good news because consumers still bookings are solid, but they haven't cut costs enough to protect those margins. Carnival is also down on that news, a little close to 2% on the close. And guys, I just want to focus on Olaplex because I think this is such an interesting company to watch, down a little over 9%. Olaplex said sales will fall below analyst estimates this year. This is potentially related to that lawsuit from those who use the product, saying that it's causing hair loss. Interestingly, today, the CEO said we need to take on more work to set the record straight in terms of what the products do. So saying that they need to take on a little bit more of the brunt of educating customers about how to use the product.
All right, let's take a quick look at the yield space here. 2-year yield right now camped out right around 4.8%, only up about 2 basis points on the day, but it's up about almost 60 basis points over the month of February here. It's something to keep an eye on as we move forward here and we start to figure out the repricing of the repricing here. The 10-year yield right now at 3.9, and at one point on the day, it did actually flirt with 4% here. That's up about 30, 40 basis points on the month of February as well, 43 points to be precise there as well here. The shorter end of the curve still kind of camped out right around 3.9 on your 30-year yield. Yields there did fall on the day, but of course higher on the month. We do want to go back to the micro here with some earnings crossing the wire. Ross Stores, those shares down slightly here in after hours trading here. The company actually reporting its 4Q comp sales were up 1%. Now that's actually a beat. The street was looking for a drop in comp sales in the fourth quarter of 1% here. So a beat there, and EPS also beating at 131 versus a street estimate of 124. Here's your guidance going forward, and this might be why the shares have been under pressure here. Full year EPS 465 to 495. That's the range that the company's giving. The street was looking for 507, so a miss on that guidance.
And you think about what we learned from Target, what we heard from Walmart. It was kind of a similar story in terms of the guidance, and you can see shares maybe taking a little bit of their time and deciding how they feel about it. I will point out that Ross Stores is up 20% over the past year, so this has been one of the outperformers.
Yeah, looking at the company's CEO, Barbara Ventler, making some comments in the press release and talking specifically as we enter 2023, the macroeconomic. Oh, go ahead.
Yeah, sorry. I'm just going to break in here.
Please.
Novavax shares down about 17%. The company's saying it has significant doubt on continuing as a going concern. So we have a going concern statement out of the vaccine maker Novavax. I'm not sure anyone actually expected this. They did come out with their results, so we'll walk you through those numbers right now. Fourth quarter numbers did come in on the revenue side of about $357 million. That's below what the street was looking for at $380. The fourth quarter loss, $228. The street was looking for a loss of $115. So the loss much wider than people were expecting. But the real headline here now, a redhead crossing the Bloomberg terminal. Novavax says substantial doubt on continuing as a going concern. Of course, these going concern statements can sometimes be a prelude to a potential bankruptcy filing.
Yeah, pretty remarkable. I'm trying to go through the press release.
This is a surprise, Carol.
Yeah, absolutely. So looking for some context in terms of what's going on. And I'm just taking a look at the analyst community. You've got 4 buys on it, 2 sells. So it's not like everybody was saying run for the hills on this one. So interesting to see.
Yeah, I mean, we're talking about a company. I mean, obviously they got a big boost from the COVID pandemic where they were getting double-digit growth. I think they had a couple quarters where you had revenue growth that was well over 100%. So I think it actually tripled in one particular month here. But even the forecasts going out, I mean, I was looking at the analyst estimates for revenue. I mean, they were still in the double digits going out into 2024. So I'm a little confused as to what's going on here.
Yeah, and it looks like they are still in those trials on the COVID-19 influenza combination vaccines. So I think that's also a really important factor. But it does remind me a little bit, it's obviously different, but we talked about Pfizer as well earlier this week, having all of that cash at hand and really needing to diversify and, figure out what they're going to do with that cash. Potentially it involves Merck. But when you're easing on the pandemic a little bit and vaccines aren't that big profit driver anymore, it makes you wonder what's going to happen with some of these companies.
Really interesting interesting to watch that Novavax sell-off accelerating after hours, down over 30% at one moment. This stock has gotten absolutely hammered in the past couple months. It was down 93% or so in 2022. Of course, that follows 2 years of absolutely outstanding growth. But
I just want to jump in for a second, looking at the press release, because I have to say, first of all, this press release is kind of wild because there's all this other information. I'm thinking, is this the right release?
Yeah.
If you dig deeper in, it says, while our current cash flow forecast for the one-year going concern look forward period estimates that we have sufficient capital available to fund operations, this forecast is subject to significant uncertainty, including as it relates to 2023 revenue, funding from the U.S. government, and pending arbitration. Given these uncertainties, substantial doubt exists regarding our ability to continue as a going concern through 1 year from the date that these financial statements are issued.
This is very interesting. This does appear to be an issue related to liquidity, at least as how the company is characterizing it. And it does appear to be a bit of a mismatch between what they're spending and, of course, the potential products that they were supposed to roll out at some point, maybe this year or next. Maybe there's enough of a disconnect there that they feel that they can't get there. But this also raises a question, too, about going back to the macro here of raising money. And is there an issue where they have not been able to do that, or they feel like they might not be able to do that at a sufficient level, a level that they felt that was necessary to at least flag to investors? And we should point out, these statements are relatively routine for companies that are having issues. Doesn't necessarily mean they're going to file bankruptcy. Of course, it is just a way of them basically flagging this to investors that could be a potential possibility.
But fascinating, that press release. Again, this is like almost the last paragraph before you say, okay, here's the conference call and you can get more. But there's so much ahead of it before they kind of raise those concerns. Just real quickly, Rivian, I do want to mention it's down almost 7%, putting out 2023 production of 50,000 vehicles. That's their forecast. The estimate was above that, more than 62,000, which has been a big concern for this company and certainly something that analysts were looking for. So another one down here in the aftermarket. Guys, I think we have to wrap, but certainly a couple of names for us to keep an eye on as we start the new month of trading tomorrow. All right, that is a wrap. Our cross-platform coverage, Beyond the Bell, radio, TV, YouTube, and of course, Bloomberg Originals. We'll see you again, same time, same place tomorrow. Market. In the meantime, one name that certainly is always on our radar, and that is Apple. And there was a particular story that was among our most read on the Bloomberg earlier today. And Maddie, it had to do with the Apple suppliers.
It had to do with Apple products, including AirPods, which of course we all watch very closely. And we are going to get to all of this with our in-house Apple expert, Mark Gurman. He's a Bloomberg News technology reporter joining us from our LA bureau. Mark, thank you so much, as always, for making time. What's going on here? What is the key change that Apple is making here?
Thank you so much for having me, as always, on our favorite subject matter. So the suppliers in Apple's supply chain run deep, right? They have tens of thousands of suppliers across Asia, across the US, across Europe, you name it. Anywhere in the world, they probably have a supplier or someone connected to them, right? And what these suppliers now are trying to do, starting with Gertech, as mentioned in this story, they make some of the components that go into the AirPods, right? They're looking to diversify their own operations, right? Maybe move manufacturing from China to some of the other countries. Maybe that's Indonesia, maybe that's India, maybe that's Vietnam, right? Maybe that's one of the countries in the larger region of Asia, right? Maybe it's closer to Europe. And that is them trying to get ahead of what some people believe will be a shift by Apple outside of China to more countries, right? And Gertech obviously wants to be there to continue that Apple business long term, no matter where Apple wants its supply chain to be.
Mark, give us your perspective on Apple is always so deep and wide. The supply chain, it's a brilliant one. There's a lot of exposure to China. Give us that perspective of, there's a lot of manufacturing that goes on in China, but give us kind of that full picture of how Apple gets all of its components, where it's getting them from predominantly, and how it's all put together.
So the components that go into Apple products are made everywhere. You can argue that a lot of the components are actually made in the US, right? You can argue that a lot of the components are made in Europe. A lot of the components are also made in India and Asia, right? They're made in Vietnam as well. And so that's only one part of the supply chain, though, right? There's final assembly, right? That's called FATP. It's Final Assembly Test and Packaging. That's where the products are put together. That's the assembly lines you see. That's what you think of when you think of manufacturing, right? That's Gertech. That's Foxconn. That's Pegatron. That's Quanta. That's where Apple has had issues, right, over the past few years related to COVID, the chip shortages, and other supply chain snags. That's been related to final assembly, right? And so what Apple wants to do is they want to sort of mitigate that by diversifying their final assembly and also diversifying the assembly of the components that go into their devices. So what you're going to see is not a wholesale shift out of China over the next several years. You're going to see them diversify. That essentially means duplicating their efforts. So while that Chinese base at Foxconn will remain, you still will see a large number of iPhones and other Apple devices built in China. You also will probably see new manufacturing lines set up in Ireland, set up in other places in Europe, maybe in the US for some devices, right? But particularly pay attention to Vietnam and India, where I think you're going to see major Apple expansions there. Malaysia as well is another key area to look at. So keep an eye on those Southeast Asian countries for duplication and diversification of what you're getting in China today. So that means if a line goes down in China, you can pick up elsewhere.
So are you talking about the component side as well as the manufacturing side, all of it?
I'm talking particularly about the manufacturing side. Okay. Right? I don't think the component side is as big of a deal. But that's where the supply chain begins, on the component side, right? And so if you have Gertech discussing now that they're going to move some of their manufacturing of components outside of China to other places, that's a pretty good indicator that you're going to see the final assembly manufacturing, what we know as production, right, the Foxconns and all that. It's pretty clear we're going to see a diversification there too, because these all go hand in hand. In the component suppliers, they want to be as close as possible, right, to the final assemblers. It saves them on shipping. It makes them a much more ideal supplier to get that business from Apple. If you look at these suppliers, some of these suppliers get 50 to 75%, if not more, of their annual revenue from Apple. So it's really important for them to not only do what Apple wants, but anticipate what Apple may want from them from the future.
Mark, I wonder if you can pause on this with me and help me dig into it a little bit, because I just wonder if we can have the same production and manufacturing capabilities outside of China that we have there, given just the way that manufacturing is done there and the situation when it comes to labor. I mean, can Apple have the same effect in a country like Ireland?
Yeah, so what we're seeing now is if you were to ask me, can manufacturing in the U.S., final assembly in the U.S., be run as well or at the cost of what it is in China, that's never going to happen in any period in the foreseeable future. But in small quantities, Ireland has been great for Apple. The iMac, right, their desktop, that's made, the majority of those are made in Ireland right now, right? They've been making those in Ireland for several generations. People really don't know about that, but that's a thing. Right? You're seeing some more Mac production move to Vietnam. You're going to see them move the Mac Pro manufacturing from China to Vietnam when that new model comes out this year, I've written, right? You're going to see China, though, still be the hub of like the main devices, the Apple Watch, the iPhone, the Apple headset that's coming out later this year. That will be made by a company called Luxshare in China. But they want to get those peripheral devices, right? The Mac, the AirPods, the iPad. They want to see more of that happen outside of China. So that's what's going to happen there. And to date, it has not been, equal in terms of cost, but where it has been equal, which is very important, is quality. And if Apple's able to get the cost and quality even 75%, 80% of the way there, in India, in Vietnam, in Malaysia, in Thailand, that is going to resolve a lot of the issues Apple's been having with China. And I think you're going to see annual improvements after every new product cycle and every new product ramp up as they continue to diversify.
God, it's wild to hear about that and the changes. Hey, just got about a minute left really quickly. Your story, we haven't had a chance to talk to you about, since you broke that story about the glucose tracker. You say, though, there's a lot more than that. Got about 45 seconds. What do we need to know? What does our audience need to know about all of this?
Yeah, so Apple's working on a technology known as non-invasive glucose monitoring. That means without pricking your skin, without taking a blood sample, by just shooting light and lasers through your skin, like a heart rate monitor on the Apple Watch today, it could tell you how much blood glucose is in your body. which is a key indicator of prediabetes, type 2 diabetes, other illnesses, et cetera. So that's something really big, really important. I know we're talking about manufacturing. The one tie-in I have there for you is that when Apple starts producing the chips and components needed for that feature, they'll be working with TSMC, which obviously is based in Taiwan.
Yeah, you tied it together also well. Absolutely. Hey, Mark, thank you so much. Mark Gurman, technology reporter at Bloomberg News, joining us on cam from our LA bureau. Check him out on Twitter at Mark Gurman, and of course, a must-read when it comes to all things Apple at Bloomberg.com and on the Bloomberg terminal. All right, Carol Master along with Maddie Mills. We're watching Rivian down about 7.25% in the after hours, and Novavax also under pressure, following some concerns about the future, down about 26%. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 421 on Wall Street. I'm Charlie Pellet. We check markets all day long at Bloomberg. Clinical stage biotech company Novavax says substantial doubt exists regarding its ability to continue as a going concern through 1 year as a result of uncertainty around its revenue and funding sources. Fourth quarter revenue missed estimates. Shares are plunging after hours. Novavax down now by about 27%. We're also keeping an eye on Rivian Automotive. It forecasts building as many as 50,000 electric vehicles this year, double its 2022 production, but below Wall Street's expectations as cost-cutting measures stem losses. Shares now lower by about 5.5% after hours. Also reporting after the close of trading, HP, it did maintain its annual guidance for cash flow, even as it grapples with slumping PC demand. After hours, the stock is up now by about 1.3%. The trading month of February is behind us. It is on to March. For the month of February, the S&P was down 2.6%. Today, the S&P fell 12, down by about 0.3%. Dow Industrials down 232, down 0.7%. NASDAQ lower by 11, down 0.1%. 10-year yield 3.92% with a 2-year 4.81%. Spot gold up 0.5%. 18.27 the ounce. West Texas Intermediate crude up 1.6%, 76.87 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week, brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could qualify for up to $26,000 per employee if you kept them on payroll during the pandemic. It's simple and easy to see if you qualify. Just learn more at getrefunds.com. So let's talk about the cloud a little bit because, you know, we talk about it so much, Maddie, with, I feel like, certainly through the earnings season, whether it was Microsoft, whether it was Amazon. Gartner's got some statistics out there about worldwide spending on public cloud services reaching nearly $600 billion in 2023, up more than 20% year over year.
Yeah, and the next guest that we're going to talk with, Julia White, is going to give us some really good insights into overall cloud market dynamics. She is the Chief Marketing and Solutions Officer and member of the executive board at SAP. Julia also spent more than 20 years at Microsoft building out Microsoft Azure, and she is with us via Zoom in Seattle. Julia, thank you so much for being here. I wonder if you can just start off by giving us a background on your company, including the fact that I need to be calling it SAP instead of SAP, which is hilarious because you literally have that in your FAQs on your website.
We've had a crazy, all of a sudden we've had like an earnings dump, so it's like all of a sudden we're going through our notes, so bear with us a little bit.
But I love that I was literally just looking at and you have that in your FAQ. So yeah, just give us the background here.
Absolutely. Great to be here with you. And SAP, or SAP, as it's formally pronounced, we provide the cloud solutions for business transformation, right? So you talked about Microsoft in my past life, or Amazon, who have big cloud infrastructures. And SAP provides the business solutions. So for things like finance, management, controlling inventory, supply chain, HR processes, procurement, all the business systems that run companies, those are the cloud services that we build and provide to our customers.
You know, Julie, what's great about talking to a company like you, and we've been talking an awful lot about, Maddie and myself, about IT spending with a lot of our guests. What are you seeing, especially in a global macro environment where there's so much debate about the outlook, Fed policy, you know, the big macro stories that are out there. What are you seeing firsthand in terms of your clients and your customers?
Yeah, definitely some interesting trends. I'd say for sure we've switched into a rigorous process around tech spending, right? There's no more nice to have tech. It needs to be proven. It needs to be able to demonstrate real business value. And you've even seen in the recent earnings round, some of the big cloud infrastructure providers, some of the growth starting to slow a bit because customers bought a lot during COVID, right? They moved a lot of existing business systems to public cloud providers. But that was just basically picking up an existing system and running it in a cloud to get some of the efficiencies, which is great. But now they needed some of that business value to come out of it, not just running it in a cloud model. But you're seeing a lot more decision makers being in the mix as they purchase these things and really saying, like, well, how are you going to help me with inflation, right? How are you going to help me refactor my supply chain?
That sounds like CFOs are in the equation, or the financial guys are like, okay, great, we want to spend it, but tell us how that helps us with the bottom line. Is that fair?
Yeah, way more CFOs in the mix, and really those value cases coming up, right? And I think the three big ones, right? Showing shifting business models, which is a CFO-led conversation. I need to go from selling products to subscriptions. I need full customer lifecycle engagement, right? That's something very hot. Supply chain refactoring. I mean, 20 years of going global supply chain. Now we're refactoring all that to be more regional. And then interesting, the last one, despite controversy or other things saying otherwise, sustainability still top concern. Switching to be more sustainable as companies, we still see constantly driving purchases.
That's really interesting, especially given the change in the supply chain piece that you mentioned right before that. I would think that given some of those headwinds, it would be really hard for these companies to continue to prioritize that. How are you kind of seeing that play out?
Yeah, again, there's lots of speculation and rumor that sustainability is dropping. We're not seeing that in terms of people's behavior. And actually, it's somewhat a little bit of a silver lining as people need to shift their supply chains, right, from big global to more regional and more suppliers. In some cases, they're investing in more sustainable agriculture, as an example, bringing new people into the supply chain that weren't participating before, which enables you to be more sustainable, bring more diversity into supply chain. So in some ways, they're actually very aligned. Or also the case where you're doing more reuse, and circular economy actually brings down costs, helps supply chain resiliency, and improves sustainability.
Your sweet spot for SAP is mid-market, which, the big, large cap companies often get a lot of the headlines, a lot of the attention. But tell us about the mid cap space, which I think, just like small caps, tells us so much about the economy.
Yeah, thank you for asking that, because most people think SAP only serves the biggest of the world's companies, which we do, but the majority of our customers are actually mid-market. And the things that we're seeing hit big companies amplify when we talk to our mid-market customers, right? When they have little fluxes in revenue, and can have devastating impacts on their bottom line. And so working with them on how do they manage inflation, better management on cash flow, better business planning. And the nice thing about cloud technology is it gives any size customer, but mid-market customers, access to the same sophisticated business process tools as a big company, right? So it really has a democratizing effect to it. So we're able to really help mid-market in the ways we help big customers, but in a way that's more agile and cost-effective for them.
What would you say is one of the biggest mistakes that you see some of these, not to put it on them, but some of these mid-sized companies making when they are struggling and they don't necessarily have access to the tools that you offer yet?
Yeah, I think that the biggest mistake is they spend too long running their company on Excel. And they're moving fast, they're trying to be efficient, but they don't realize what they're missing out on. And, I was actually just recently working with a kind of mid-sized chemical company, and they'd waited a long time to move into automation of business processes, which just helps a lot around efficiency and decision-making. And, once they'd spent the time to, implement some more modern, enterprise resource management, they were able to react much more quickly, and they saw immediate results, but, they had to go through that journey to get there. And then in retrospect, they're like, we should have done this earlier, but it takes time and focus.
It does remind me a little bit, and we don't have to get into this, but it reminds me of FTX using QuickBooks. When we all found that out, we were like, oh my God, how did you have such a huge company and do that? But then we talked to these startup guys who are like, if you have a big idea, just make it happen and do it. But it sounds like I'm hearing from you that you do need to focus on the bones and the infrastructure a little bit as well.
Yeah, really thinking about all these processes. Yeah, they're getting it done, but at what cost, and what are they not getting? And it's oftentimes hard to see the opportunity cost or the missed cost of what they're doing. But as we work with them, and part of it too is it used to be, big and hard and expensive to deploy an ERP or enterprise resource process, right? It used to be on premises, but now the cloud changes that so fundamentally. But I think a lot of mid-market customers are still coming to realize that actually, I can get a really robust enterprise resource system in place in a couple of months. It's not 3 years and $300 million anymore.
Julia, tell us about, just got about a minute or so left here, the feedback loop. So in other words, you're talking with your clients and customers. You're saying that these organizations are feeling the impact of a downturn in the economy. So you say about value with, fewer resources. So how do you go back to your creative team or your engineers, when your solutions team, and say, hey, here's what we need to be doing because this is what the customer demands?
Yeah, I think the big trends we're hearing from our customers are automation, which means, using AI to identify where there's inefficiencies and automating that out, and helping the customer be much more predictive with what's next, right? Like the world's changing fast, and all of our crystal balls are kind of imperfect these days, and so that agility to do different kinds of predictive planning is what our
Is the generative AI move kind of impacting you guys all of a sudden? Because it does seem like it's all of a sudden on everybody's radar, although we know it's not brand new.
Yeah, it has, but it has definitely, hugely revolutionary opportunities with it. So absolutely looking at how we use it in a bunch of our different products, whether it's HR and onboarding to customer engagement.
All right, going to leave it there. Hey, thank you so much. Really appreciate it. Julia White, she's Chief Marketing and Solutions Officer at SAP, joining us via Zoom from Seattle. Some great thoughts, and I think her perspective, too, more broadly, Maddie, about, people, clients want to spend, but they've got to do it smartly. They're thinking about the value proposition when they go to do IT spending. So I thought that was a really key component as we have our big, broad macro discussions, if you will.
And like you said, we've been talking to all of these because you make a great show, and so does the team. We've been talking to a lot of people who are behind these companies that can really be leading indicators for us about where the economy is going.
Just keeping a watch on shares of Rivian. They're still down about 8% in the after hours, and Novavax, down about 25% following some concerns about their outlook. All right, you are listening and watching Bloomberg Radio. Let's get a check on world and national news over to Nancy Lyons. She's in D.C. Hey, Nancy.
Thanks, Carol. President Biden says his health care proposals have been good for seniors who are seeing their prescription drug costs go down, but he says they're also good for the entire country.
Bringing down prescription drug costs doesn't just save money for seniors and Medicare. It's going to have a significant effect on the federal deficit. It's going to lower the debt by $159 billion.
During a speech in Virginia Beach, Virginia this afternoon, Biden warned some Republicans are insisting they'll cut spending as part of a deal to raise the debt. And he calls that a purely political move. He's urging Republicans to outline the cuts and programs they're targeting. Environmental Protection Agency Administrator Michael Regan is back in East Palestine, Ohio, the scene of that toxic train wreck. Today, he vowed federal help will stay there for as long as it takes for the community to recover. He did warn, though, that people should not be going into contaminated water.
Some of our creeks and our streams have pollution in them. We're working very hard to clean up that pollution. For the time being, while the pollution is present, as a father, I would not advise anybody, adult or child, play in the creeks and streams.
Regan also announced the EPA's Community Welcome Center is now open, where residents can request air quality monitoring and can sign up for cleaning services. Federal officials are suing a Louisiana chemical maker, alleging that it presents an unacceptable cancer risk to the nearby majority black community. Officials are also demanding cuts in toxic emissions there. The lawsuit accuses Denka, which makes synthetic rubber, of emitting the carcinogen chloroprene in such high concentrations that over a 70-year lifespan, it poses a cancer risk 14 times what's acceptable. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Lots of earnings after the bell. We begin with HP Inc. Shares are up 2.3% now. HP maintaining its annual guidance for cash flow, even as it grapples with slumping PC demand, a sign it does expect a rebound later in the year. The clinical biotech firm Novavax says substantial doubt exists regarding its ability to continue as a going concern through 1 year as a result of uncertainty around its revenue and funding sources. Fourth quarter revenue missed estimates. That stock plunging after hours, down now by about 24%. Also reporting after the close of trading, Rivian Automotive. It forecasts building as many as 50,000 electric vehicles this year, double its 2022 production, but still below Wall Street's expectations. After hours, Rivian is down by about 8.2%. We have closed the books on the trading month of February. Where has this year gone already? For the month, the S&P down 2.6%. It is on to March. Today, losing day with the S&P down 12, down by 0.3%. The Dow today down 232, down 0.7%. NASDAQ down 11, a drop of 0.1%. 10-year yield 3.92%. Spot gold up $10 the ounce, up 0.6%. West Texas Intermediate crude up 1.3%, 76.67 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Maddie Mills live here on Bloomberg Business Week. And there was a story in the Bloomberg that caught our attention today. It's about how a new era of books are helping Black workers navigate corporate America. It's important as Black workers still lag their white counterparts, particularly when it comes to the highest paying and most powerful jobs. So our next guest, Maddie, certainly understands this and the importance of diversity in any organization.
Absolutely. With us now is the author of Rising Together, How We Can Bridge Divides and Create a More Inclusive Workplace. The author, Sally Helgeson, who is also a speaker and leadership coach, is with us via Zoom in New York City. Sally, thanks so much for making time for us. One of the things I'm struck by in the book is even just the emphasis you have on we, how we define we, how we create a we, how we get there. But it feels like a pretty lofty goal sometimes. In creating and researching the book, what would you say is the thesis, the big lesson you learned in how to create that we at a workplace?
I think the strongest way we can create a we in the workplace is to focus on what our behaviors are rather than what the thoughts might be running through our head. There's been so much emphasis on unconscious bias and its role that I think it's gotten us more focused on our thoughts rather than our actions. So by identifying specific inclusive behaviors and by also having an awareness of the triggers that can hold us back from building strong relationships with people we may perceive as being different than ourselves, I think that's the best way to move forward.
Do you see, though, that action is maybe also linked to unconscious bias? And help me understand how they're not.
They are. Of course, they're linked to unconscious bias, but I think that it is more helpful to learn to act our way into new ways of thinking than to think our way into new ways of acting. Let me explain. When we practice a new action, and we may engage somebody in a way that's different than maybe feels authentic to ourselves at that particular moment, we may get a response that gives us a new path to engaging that person and then people that we may perceive as being like them. We all know how that works. You can think you feel a certain way about a certain group of people. You know, it could be anything from, some person who's heavily tattooed. I mean, that could be an example. Oh, I think that way. Well, you react in a way to a person who has that characteristic and get a good response from them and are able, therefore, to establish some kind of rapport with that person. And then you start to change your mind about people who you think are like them.
If I cut to the chase, Sally, it almost feels like actions speak louder than words. And when it comes down to it, because, to be fair, and I think about this with George Floyd, the murder of George Floyd, and we had so many conversations once again about diversity and inclusion. And for someone who's like yourself, probably, been covering this for a long time, I feel like I've had these conversations 5 years ago, 10 years ago, 20 years ago. So something's got to, we're obviously not doing it right.
Exactly.
Because we're not moving the needle fast enough. So, I think about all the training then as a result of what you're saying, that all the training that we all go through, courtesy of our HR department. So what's one or two things that we can all kind of take to heart and do better in terms of actions?
Yeah, I'm not here to diss the kind of inclusive bias training that organizations have been handing out for the last 10 years, although I've seen it done wrong and I've seen it provoke backlash. I'm here to provide, if not an alternative, then the next step, which I think is focusing on specific behaviors that we can practice. Here's an example. One thing I really advocate in the book, but that I've been working with for many years, and I've been writing about inclusion since I wrote The Web of Inclusion in 1994. So it's quite a while. I've had a lot of experience and seen a lot. One thing I find really, really helpful is to write new scripts for actions that we may feel are potentially, have the potential to kind of trigger us or stir up certain emotions. And I'm not talking about egregious examples of racism or harassment. I'm talking about the kind of everyday triggers. I wonder what that person meant by that. I wonder if they were referring to me and the time I did X, Y, and Z. So one thing we can do is to try to write a different kind of script for that person, rather than, I wonder if they were trying to offend me, is, I have the feeling that maybe that person was saying that because of the bad experience I know that he or she had with this or that person. And,
So do that before we cancel them, essentially.
Yeah, and I exactly. I mean,
I'm making a joke, but it's not
No,
funny.
I know.
I think there's this big conversation about, cancel culture, and I wonder if, we are cutting off an important conversation by doing so.
I think we cut off important conversations all the time because we either, okay, that person's off my list. How dare they say something like that? Or on the other hand, well, I see I'm being canceled because I can't say anything that crosses my mind, no matter how much it might blow up a situation in a professional situation. No, you can't. And guess what? You never could. So trying to find ways to diffuse a situation rather than inflame it, to give someone the benefit of our goodwill, even if we're not positive that they deserve it or have earned it, can give us more positive paths towards action. Because as you say, we have been having these conversations for a long time. I have been having these conversations for over 30 years, and we have not sufficiently begun to change things.
So when you work with, and you have worked with Google, Deere, Johnson & Johnson, these are all very familiar companies, certainly to our audience. Just got about 30, 35 seconds left here. I mean, what is it that is often their first question about how to do it differently? Or what is your first observation? And just quickly, if you could.
The first question is, how can we behave differently? What serves us? Overall picture, new scripts, and giving others the benefit of goodwill. Small picture, it can be, instead of being triggered by somebody who's very good at getting noticed for what they do, say, wonder what I can learn from this person, instead of, well, I'm glad I'm not like them.
My best friend always tells me, don't sweat down, sweat up, which I think is really good
I
advice.
like that.
Like, if you're going to worry about anything, learn from the people who are doing what you hope you get to do someday.
That is really
She's
interesting.
a good friend. Yeah.
That's really, really...
And good advice from you as well, obviously, Sally.
All right, Sally Helgeson. She's author, speaker, leadership coach. Her new book, Rising Together, How We Can Bridge Divides and Create a More Inclusive Workplace. Joining us via Zoom from New York City. You're listening and watching Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is 4:53 on Wall Street, and these are some of the company stories we're following at this hour. Clinical stage biotech Novavax says there is a substantial doubt about its ability to stay in business through next year, underscoring the depth of the drug maker's struggle to develop and sell a COVID-19 vaccine. After hours, shares are plunging by about 24%. Rivian Automotive lower as well after earnings. It forecast building as many as 50,000 electric vehicles this year, double its 2022 production, but below Wall Street's expectations. After hours, the stock is down by about 8.2%. Target shares today did advance by about 1%. It did also deliver a cautious profit forecast. And with more on that story, here's Bloomberg's Steve Rappaport.
Charlie, Target predicted a slower than expected recovery from a rough 2022 when weakening demand for discretionary goods hammered the retailer's profits and stock. In a sign of uncertainty, Target said annual comparable sales may decline by a low single-digit percentage or rise by the same amount. The muted outlook echoes the message from Walmart's earnings report last week that showed retailers' caution on the cloudy economic picture. Homebound shoppers splurged on Target's furnishings, appliances, and electronics early in the pandemic, but consumers shifted spending elsewhere last year. Charlie?
And that's Steve Rappaport reporting again, Target up by 1%. Tesla says it will be building a new plant in Monterrey, Mexico. We'll give more tomorrow during the Investor Day. And those are some of the company stories at this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
We've got more Business Week to come, but first, let's get a check on the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Madison. The U.S. Supreme Court is deciding how to rule on a challenge to President Biden's plan to cancel student loan debt for millions of Americans. The administration says it has the authority under a law that allows the president to provide relief in national emergencies like the pandemic. Bloomberg's Irv Chapman has more on today's arguments before the court.
The state of Nebraska's lawyer, James Campbell, argued the White House overstepped the provisions of the law.
Crossing off nearly $500 billion in loans payable to the government is a quintessentially legislative function.
Chief Justice John Roberts appeared to agree. Justice Sonia Sotomayor defended the loan forgiveness.
Many of them don't have assets sufficient to bail them out. Many of them will have to default. They are going to continue to suffer from this pandemic in a way that the general population doesn't.
A key issue in the case is whether the states are materially impacted by the loan action. If not, they don't have a right to bring suit. In Washington, Irv Chapman, Bloomberg Radio.
House Speaker Kevin McCarthy is taking a unique approach to keep Republicans, including himself, in power. He's given 5 competing GOP groups a seat in leadership. McCarthy has dubbed them the 5 families in a nod to the New York Mafia. Attorney General Merrick Garland and National Intelligence Director Avril Haines are asking congressional leaders to extend a controversial warrantless surveillance program. Section 702 of the Foreign Intelligence Surveillance Act is set to expire at the end of the year. It's long been opposed by privacy advocates because it sweeps up Americans' electronic messages along with those of foreign targets. President Biden says he intends to nominate Julie Su to serve as Labor Secretary. She is currently Deputy Labor Secretary. She would replace Marty Walsh, who is leaving to become the head of the National Hockey League's Players Union. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Madison and Carol.
All right, Nance, thank you so much. You are listening and watching Bloomberg Business Week. It is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The sacrifices you made keeping your employees on payroll during the pandemic are not forgotten. Check the potential refund your small to medium-sized business may be eligible to receive through the Employee Retention Credit with no upfront costs. Learn more, just head to getrefunds.com. All right, we are watching shares of Novavax still down about 22% in the after hours, plummeting after they put out a statement and press release talking about substantial doubt about the company's financial future. So let's get to it. Bloomberg biotech reporter Angelica Peebles joining us on the phone from Boston. Angelica, what do we need to know? Just got about a minute.
Novavax, one of the developers of a COVID-19 vaccine, today saying that there's substantial doubt about its ability to keep to stay in business really over the next year. And it's a pretty significant development. The company has faced a number of delays in getting its COVID vaccine authorized. And by the time it finally did last year, the market was already dominated by the mRNA vaccine makers, Moderna and Pfizer, and just really speaks to the issues that the company will face now. It has an authorized vaccine,